Hello all of you. Welcome to the part 2 of logical magic of cost of capital. Yes, we have already completed and thank you for the response that you all have followed. The first part, how to derive the formula KD. There is no mugging up, right? So same, and always we do the tough part first. KD mein to bhi many things were there after tax and all. Today, what is going to be the cost of preference shares? What is going to be the cost of equity shares, the cost of the loans? And once you know all these costs, you can compare that if you want 50 crores for the business, for the startup, what should be the combination? So capital structure is the next part. Before that, you should know what is the cost of each 100 rupees. You get it in the form of debentures or shares or in the form of loan, right? So here we start again. Hit your notebook or start साथ में शुरू करते हैं, right? And write all the notes what I'm giving to all of you. This was the last class which we took for KD. Now I'm explaining you the cost of preference share capital. On preference share capital, we pay dividend. Always on the face value it is paid and no tax benefit. I hope you all know this. We have already done FM2, we are doing in group 2. In group 1, we have seen in income tax, interest on debentures, interest on loan. What you pay to outsiders on loan, that is allowed as expense, but not your this interest or I can say preference dividend, equity dividend. These are not allowed as business expense. So there is no tax benefit. You know, these are called as residuary after giving off everything to the outsiders. Loan pe EMI de do, debentures ko interest de do, then what is profit left out? Part of it is accumulated in the business in the form of reserve, part of it is given to the shareholders. But preference dividend, generally the interest is fixed, it is pre-decided. Preference dividend is always said to be a hybrid mode of finance. It has the features of the capital because it's a preference share capital. And it also has the features of the debentures because the preference dividend rate is fixed. So now KP is preference dividend divided by net proceeds, NP, net proceeds into 100. So if I am paying 10% preference dividend, 10% I am writing or 10 rupees, on face value, 100 rupees is the net proceeds into 100. What is my KP? 10%. Ma'am, ये तो super easy है. Debentures में so much notes you made us write. This is so very easy. Preference dividend, 100 minus tax we are not doing because preference dividend is not allowed as business expense. Divide by net proceeds into 100. What is the net proceeds? 100. Now suppose if I twist the case that I'm going to pay preference dividend 10 rupees, 10% dividend. But you know, the face value is 100, but I did some expenditure of 5 rupees for arranging the preference shareholders and all, and I got in my hand only 95 rupees. So even though I am paying you preference dividend 10 rupees, see, I am again repeating, if you write it in bold capital letters. Dividend and interest are always calculated on face value. How much money did I get? 100. But I spent 5 rupees on some issue related expense. So how much I am getting to use? 95. But how much dividend I need to pay on face value? 10 into 100. So what is going to be my out of pocket cost? Now let us see. 10 divided by 95 into 100. 10.53%. Take your time. Understand the logic. If I give you 10 rupees dividend and you are giving me 100 to use, it's 10%. But if I am giving you 10 rupees dividend, but you are giving me only 95 to use, then my cost is going to be 10.53%. So let us go now to the printed notes and see. How do you calculate? See, these are the problems we have solved. And in lockdown, when I could not arrange for a touchscreen laptop, kaam to chalna chahiye. This typing really helped. And I hope it is looking neat. We have solved the problems like this. If you issue at PAR, I can't solve all the problems. This is a logical problem. But karte hain, chalo. Ye raha, dekho. Cost of preference share capital. Preference dividend divided by net proceeds into 100. But along with preference dividend, if I am issuing the preference shares at 100, but I have decided to repay at 110. I said, dear preference shareholders, after 10 years, I will pay you 110. Then 10 rupees is my extra premium which I have to pay over 6 years, 8 years, 10 years. So 1 rupee per debenture I am paying you extra. That's what is this. Same. Like we have done debentures. Anyone watching this video, just go to the playlist, Concepts of FM, and check the earlier video first. Part 1 of this, where I've shown in detail how to get KD. So KP will be then, what will be the average premium? Redemption value 110. Net proceeds 100 divided by number of years. Or how much you are using the money? 100 you are taking net proceeds. 110 you are repaying divided by 2. Average you are using 105. So KP is equal to preference divided by net proceeds. No 100 minus tax because there's no tax benefit. यही लिखा है यहाँ पे सब. And bonds के लिए भी same रहेगा. And if you pay average premium and average liability, कब आएगा? When you will take extra cost in the form of average premium divide, when the face value and redemption value is not same. If you want, note down this formula second in your booster material. Do it right now. I'm here only. I've said as if irredeemable, but even if redeemable is there and the face value and redemption value is same, you will use this formula. If there's a difference in the face value and redemption value, you use this formula. Cost of preference share. KP. Finished writing? Don't take screenshots, dear students. लिखो. आप 2-3 बार लिखोगे तो automatically, and you know, उतने भी बड़े नहीं हो गए. How we used to put, like, I was a student who never used to like chemistry and photosynthesis, but 10th तक तो we had to read. So what we were doing for maths, for science, for that calcium formulas and all, what we used to do? We used to put charts. So there is no harm. Just make a flow chart where you write KD, KP, KE formula and keep it. While you eat, while you talk, while you comb, you know, you should see that chart. वो दिखते रहना चाहिए. After 10 days, change and put another chart. Ma'am, इतना time का है now. Don't say this. Making a chart with one colorful pen will not take more than 10 minutes, which goes just in browsing here and there. करना है तो कर सकते हैं. पढ़ना है तो पढ़ सकते हैं. Right or not? करके देखो. This looks very kiddish, but it works. I've seen CA students room full with all charts and all, and it looks amazing. Enjoy karo na. Baad mein, when you're qualified, professional, and when you go in field, you can say this example. That my classroom, my desk, my study table, my cupboard, my wardrobe, I had charts. वो madness, वो जुनून तो आना ही है studies का, whether you like it or not, right? चलो. So I want to share once again the screen. I hope this is clear for KP, cost of the preference shares. Preference dividend divided by net proceeds into 100. Another formula, please write with me, KP. Preference dividend plus average premium divided by average liability. And what is average premium? Net proceeds minus issue price divided by number of years. What is average liability? Net proceeds plus issue price. You got it 100, but you're going to repay 110, divide by 2. So average, how much money you are using, and average, what is the cost per year, divide by number of years for which you have issued. This is your formula. This much only if you write and put it. इतना सा table बनाओ. KD, KP, KE के formulas लिखो and put it on your desk. Tell me, does it? I'll share. I don't know if you have seen in our description below, we have Telegram and WhatsApp and Facebook and all the VIP groups link. If you want, if you feel these knowledge are amazing, because YouTube I can talk, I can share, but I can't give you all the details. So I'll share you one of the students' screenshot. If you want later, take the print or usko lagao, which she has put up. It is amazing to write it once. This is the best way to enjoy this knowledge. Score super well in the exam. Understand the logic, how the KD, KE, capital budgeting ratios work, and then go to the field work. You will do outstanding, amazing work. Thank you so much for watching this video till end. Here we complete with the second part of the logical magic of cost of capital. And wait and watch for the third and last part where I'll give you all KE and then we will combine and move it. Signing off now. See you, Dipti Chheda here. Bye-bye.